What's up, guys? What's going on? Good afternoon. Let me make sure that everything looks good. Does everything look good on your side of the screen? I got things a little bit, somewhat more organized than the last stream. Hopefully the sound is good because if you remember, I'm not too good with the sound. I'm not too good with paying attention this morning because Bitcoin is up $200 since I added to my spot BTC and actually picked up ETH again. So I picked up ETH again, I guess, about a half hour ago. So we'll go over that. It was an incredibly well thought and strategic play called read a tweet from Vitalik and mark it buy. But can you guys hear me? Everything sound good? Sound clear, crisp, all of that? Let me see what we have in terms of windows open. I'll get rid of my mini agger. Okay. And yeah, let me know. Let me know. How's the sound? How's the sound? How is the sound? 2.0 go. Okay. So I see the term, I see someone write good. I see someone write hash. I see Ash write hi. 2.0 go. So I'm assuming that you guys can hear me nice and clearly. Yeah, intro music, man. Had to step it up. Dave, you know that. Talking about that. Want to step up the YouTube presence, and just because we want to be non-sensational and sort of this less I guess commercialized marketer type of presence on YouTube doesn't mean that we can't jazz it up a little bit and put some nice dressing on this platform. So yeah, to some degree that is important, and I want to have the presentation quality be up there. I want my lobby music to be nice. And the problem with that is the last few videos I did, it's trademark, copyright, whatever it is. Haven't taken a law class in a long time. But I had Led Zeppelin playing in the beginning. That video got removed. I had another video that had, I think, a movie clip in it. That video got removed. So this playlist is specifically non-copyright, I think, so you could play this without worrying about them coming after you. And, it's not hard for them to do that. They just scan the audio of videos the same way that your Shazam works. When you're in a restaurant, you Shazam the music because you don't know what song it is. So really simple for them to crack down on this stuff. But yeah, we're going to, hopefully make this this channel a lot cooler than it already is. All right, so let me say hi to everybody. Let's go to my cutscene talk screen. All right. Okay, let me see who we have. Nam, what's up, buddy? Cornholio, how's it going, Cornholio? Sweet Canary, Ripcord, Satoshi Ray, Dave, what's going on? Koa, X Factor, Luna, D Ross, Ash. Okay, Mahel, B-Town Fu, Math Max, Roman, Jake Purdy, Carlos Cifuentes. You hear how I pronounce that nicely, hopefully. Rel, what's going on? All right, Connected. Cryptic, Ash again, Rel again. All right, so getting a little redundant. I think we said what's up to everybody. WD, JE, Fuzzy Bid. I want to say Fuzzy Bird. And Funky Art from Switzerland. Good evening, good morning, good afternoon, whatever time it is. All right, so we're going to take a look at what's going on in the market. There's a lot to talk about, obviously. What we don't want to do is we don't want to feed me in terms of giving me a bunch of different things to talk about because, Lord knows that we will just go on ridiculous tangents and segue from one topic of conversation to the next. And then I'll forget that the question that I was asked is completely irrelevant to what I've been saying. So that is the thing about doing these live streams. I'm talking to myself, and I've had this discussion with friends on BlockRoots before. It's a one-man show, and I got to make sure that I keep it moving. So we got a few things with me today. So for those of you that have been following along, you know what this one means. So this is the lightest version. So if you could see this, this is the lightest version. So technically, this is the one that requires the least amount of pressure. They're all the same weight, but the amount of tension, this is the lightest one. This accompanies me on really good days. And it's been a really good morning. It's been a really good night. Been trading like a beast. And I'm happy to say that I think my hit rate at this point is 90% in the last 24 hours, which is awesome, but not for nothing. I've been removing trades pretty damn quickly because in this kind of environment, you have to take your first trouble area. So essentially, I'm taking profit at the first sticky area. So this guy accompanies me, this guy, this lady, whatever you qualify this inanimate object as. That one has the least amount of tension, so you know things are rolling. When you see me busting out the one that's black, and that one is about 450 or 500, that's when you know we got issues. That's when you know we got issues. And then I have my little assortment, because this is the cockpit today. I'm probably not going to be leaving this area for a little while. Got a family here, but I'm in my nice little cove. So I got the Perrier today. I got the iced cold brew coffee. And then I don't go anywhere without this Nalgene. All right, there's nothing fancy about this. This Nalgene bottle, it spends a lot of time near me, wherever I am, unless I'm going out, right? Because what I make sure I do is I make sure that I consume at least, I'd say I drink at least 2 of these before the end of the afternoon. What I used to do when I was a heavy gym rat, which I still am, but I've kind of tapered off a little bit with regards to what I prioritize in the gym. What I used to do is I used to roll to the gym with a gallon milk carton, cleaned out, and I would have areas marked off on it. And the areas would be the hours of the day. So I would know, okay, I'm drinking essentially a gallon of water a day sometimes, right? And I'd make sure that, all right, by 4 p.m. this time, I want to make sure that I consume, at least a third or at least a half of this. Not going crazy, but water intake is extremely important. There are times when I'm thinking, what is wrong with me? I am sort of hyper vigilant about my own internals. So I'll be thinking, why am I so tired? What is wrong with me lately? And it all always comes back to a few things. It's diet. For me, it's water intake and it's sleep. And if those are not being optimized, right? If I'm not optimizing those, I'm really suffering, especially I feel like, when you hit your mid-30s, all these things really matter. So that being said, I have the assortment right here. Well, this is Crypto and Coffee. It's the afternoon though. All right. So now that we said hi to everybody, let's take a look at the chart. Got a good amount of people in here. That's exciting. Where we sit in the chart with BTC. All right, so first things first. What's going on in traditional markets? Yes, if you could, please smash the like button. All right, the more likes we have, the more that we're prioritized in this, weird little ecosystem that is YouTube. And ultimately, the more likes that we get, the more that we are, put front and center. And I like to do things for the sake of doing them because I find joy in helping, even if it's 10 people. I think it's cooler when you're helping, just a few people, right? There's this sort of intimacy to that. But at the same time, we think that we're going to be putting out quality content and we want to try to help as many people as possible, right? And it's not like, again, we're trying to monopolize YouTube whatsoever. I've put this forward in other videos. And, in our previous videos, Crypto Cred stops in, and he is someone who I say, hey, if you're going to watch our videos, make sure you watch Crypto Cred's videos as well. Show love and support to the people that are bringing quality content to the platform. There's a lot of garbage on the platform. There's a lot of people on the platform that operate off of sensationalism. The thumbnail with the face, and it's got like, where's Bitcoin going? And it's got a guy with some type of ridiculous countenance. So make sure you show love to all the people that are really putting in work and are, valuable sources of information. So there's a lot of these people on Twitter, but they don't come over to YouTube. So we want to bring that to YouTube because it's a really good, I think, untapped mine, you would say. Okay. And it's a great place to really explore if you're trying to learn anything. So if you're on the other side of this, if you're trying to learn how to trade, start for free, right? Consume the free content. And you can do it, honestly, on all free stuff, right? On all free stuff and your tenacious approach to learning and trying to consume as much as possible to increase your human capital. Okay, all right, good stuff. All right, so let's talk about, real quick, the election. I just want it to be over. Okay. We knew this was going to be a divisive election. We knew there's going to be a lot of vitriol thrown back and forth. It seems, all right, that in the last, I would say, few hours, that the S&P is just intent on moving upward. All right, so if we look at something like the ES, which is the E-mini futures based on the S&P, this is just putting in a beautiful daily candle. I hate to use the term beautiful. I hear sensationalist YouTube people throw that term around all the time and to describe charts as if they're beautiful. But hey, look at this candle. Look at the amount of range in this candle on the daily, and you're just wiping out all of the downward price action that we were putting in prior. And this is retaking a level that we have not been since back in October 23rd, or on October 23rd. So S&P trading a bit higher than the ES. And again, it doesn't seem that the market is, it seems like whether or not now, I think the fear was, Donald Trump was saying, and I always say, may the best man win, right? It is what it is. Yeah, you do your part to vote, and that's really what you can do. But people were saying that if Donald Trump didn't win, or if it was maybe contested that he might not win, and then Biden would win, we'd see the market sell off. I do think that there will be some selling pressure going into the end of the year if Biden wins. And that is because if there is the increase in taxes that he has proposed, you're going to see some people want to realize those 2020 gains right before the 2021 calendar year. It makes sense, right? It's probably a smart thing that I'm going to be doing as well. I'm going to be taking off a little bit more than I might have considered initially I would have let ride. So realizing those gains could create some downward sell pressure, but this also might be something that is, more priced in now by participants who were already voting for, Joe Biden to begin with. So the market is a great, it's a great tool in reflecting a lot of what has gone up to that point, but not necessarily everything. So the S&P is pretty determined to continue to move higher, which is great because Bitcoin, again, it doesn't necessarily need to be this store of value, this tail hedge on everything legacy related. Again, it is, as Chamath said, it is orthogonal to the current financial system, but it doesn't have to be that. It could be a risk-on asset. It could be your high beta play on tech stocks, right? There are funds that are playing it as a high beta play on tech stocks right now. So S&P moves up, Bitcoin moves up. Let's say the S&P moves sideways and the dollar starts to decline. Hey, then the Bitcoin moves up as well. Dollar starts to move up. If you have a strong dollar, it doesn't necessarily need to mean that Bitcoin's going to move inversely to that. Okay, we see these are short term, and I think again long term the idea is that Bitcoin is again orthogonal to the current financial system. Orthogonal meaning it's not parallel to it; it's at a right angle to it essentially. So ES moving up. All right, DAC, right? NASDAQ putting in a ridiculous move last night again. Higher beta, right? This is going to be something that is a lot more volatile. And, this is all of this stuff, right? Confidence, markets moving upward bode well for BTC. Now, if you have someone like Trump win, of course, that would mean that, you'd probably have a stronger dollar, might have an initial reaction on BTC. I don't think so, though, because then you still get the equities moving up. Where Trump might hurt, tech, might hurt tech. Right? I don't think Twitter would be too happy if Trump became president again for a second term. But Twitter dropped off 20% either way, going back last week with all of what was taking place. So ES, all this looking good. When I say ES, sometimes I'm just using that to refer to the S&P. So for those of you that are unfamiliar, the ES are the E-mini futures. Those are futures contracts on the index. Okay, so getting over to BTC. So in terms of short term, my levels short term have not changed much. I might have changed the colors, but this monthly level was probably the most significant on the chart that we had above us. Significant in that in terms of longer term price action, this is the highest monthly close. Very significant level, but as we've known before, you could come into contact with higher time frame levels like this. It might look good in the first 4 hours that follow. You're thinking, we broke the monthly level, that's huge, but it's a monthly candle, okay? It's anywhere from 29 to 31 days long, right? It's 24 hours in a day. You break that down to smaller little data sets that make up that larger, higher time frame data point. While they all do look exactly the same in sort of a fractal sense and a structural sense. A candlestick has 4 data points in total. Don't forget that the monthly candle can take a long time to chop around and still leave you as the wick, right? So you can have, for example, this is the monthly level right here. This level was 13,873 on BitMEX. Might be changing plus or minus a few on other exchanges, right? We're above it, but we're also only 4 days into the month, right? We have, let's see, in the monthly candle for the month of November, we have 26 days left and 7 hours. So, by all means, you could put in the next few days and this even a week, 2 weeks, 3 weeks, doesn't matter, and still end up closing the monthly below that level. So what I like to do is obviously at a higher time frame level, and a major area of significance where it's sort of like when you're looking at a higher time frame level, we're all looking at the same speed bump that we're going to be in contact with soon, right? What do you end up doing? You slow down, you modify your driving a little bit, people react in anticipation to it. We know that at some point, as we get closer to that, we'll probably see a reaction. Okay, so the monthly level will probably give you a good initial reaction. Higher time frame levels, monthly levels, weekly levels, daily levels, 4-hour levels. The idea is there's sort of a self-fulfilling nature to them. Now, the further back we go, the less relevant they are. There's been a lot that's transpired since then. It's highly unlikely that you have a lot of resting orders that have been around since then. So imagine what I mean by that is it's very unlikely that someone has used this monthly level as proxy for a short within this time that followed and been saying, okay, I'm going to keep a short on until my stop has hit above this monthly level, right? And then as you approach that monthly level, they've been in this short, and then suddenly, or even if you had a long from the high of back in 2017, they've been in the long, and then once we approach that level, right, they're going to get flat and sell their position. Odds are that everything that took place back here, whoever is in it up to this point is not going to be making life or death decisions on us, getting back to their point of entry, right? Way different considerations now. So you get the first touches of that level, all right? So you get the reactions at the level, but I never would say, hey, inform your higher time frame bias based on this without a significant close or significant price action above or below still. So right now we do have significant price action. We do have if you look at the structure with all of this stuff sort of taken off, what is this structure telling you? Well, the diagonal trend line to me is less important than a horizontal line, because a horizontal line, it means that price passed through a certain point. All right, the price either went higher or went lower. This actually has to do with supply and demand, whereas a diagonal, this implies a rate of change of supply and demand over time. So it's sort of like, buyers are accelerating their buying activity over time at this rate, right? And it's a linear rate. I mean, it's a linear rate of change in this case. If you have a perfect diagonal level. So this is just telling me, though, just looking at this from a structural standpoint, these lows are just, every single one is being bid up much sooner. So one of the most important things to think of when you're trading is context, right? So the most important thing I'd say, for me, it's context. And then I'm looking, all right, okay, so now I understand higher time frame context. Based on that higher time frame context, what levels make sense for me to get involved at? Right, so then I start to look for local levels where I want to place trades, keeping in mind higher time frame context. So this might be just a complicated way of saying the trend is up, higher time frame context is up, greater market structure changes have occurred to the upside. We've flipped major supports, resistances into support. My priorities then therefore become to look for the long opportunities. Okay, I start to really rank down any kind of short possibilities that are offered. So maybe we have a short that sets up. Structurally, it might be a good short in a ranging environment, but I just say, not worth it right now. I'm going to prioritize the long side of things because current context is one that ultimately is putting wind in those sails. So the secular trend, the secular drift is upward at this point. So higher time frame looks really good. The market has been being bid up just relentlessly, and I think if there's someone I actually heard mentioning this was Cred, he put it that way. So not to steal his verbiage, but the market has been bid up relentlessly. And I made a joke this morning of saying, hey, this rounding top, and then this sort of press upward reminds me of a scaled down version of what we're seeing right here. I think that at this point that it might be out of the question for us to have a major pullback in the near future before we spike up to maybe, 14.5, 14.7, or even 15,000. Okay, so this is not yet showing any signs of, absorption. It's not showing any signs of, pulling back, a loss of momentum, a loss in volume, or any of that. So really, this almost looks like it is about to just continue to squeeze much further upward. And you do have in this case, the tailwinds from everything else in the market that is continuing to press upward as well. Not only that, we're seeing that on the spot exchanges, they are trading slightly above the derivatives contracts. So what you're seeing throughout the duration of this entire move is this, right? Very simply, this is the BitMEX basis, but all the other bases are looking exactly the same pretty much. And what you're seeing is that spot is essentially trading at a premium to futures contracts. So we're not really worried about, leverage positions that are maybe juicing up the positions a little too much and that might have to worry about liquidation below us, right? More local liquidation levels. We're not really seeing that there's any kind of abundance of that activity to really worry about it to begin with. Doesn't mean that spot can't sell off. Doesn't mean that a person with spot can't say, don't like this location, gonna dump my spot bags. There's just less of a less of emotional attachment to a spot position, or there's more of an emotional attachment okay, and more of a reluctance to sell because you don't have to think, the same reason why alts leave bag holders. Okay, alts leave you as a bag holder because a lot of the times you think, we lost all my important levels, but I have a bag, right? I have something to show for it. A derivative, if you're long, price moves below, you lose your margin, right? You lose everything you have left. You have nothing left to show for it. You go home empty-handed. So we're not really seeing the market has shown an abundance of this derivative activity. So there's really not much of a pain point to hit in terms of anything that would cause any kind of major whiplash. So the market is becoming, in this sense, less volatile. So above key levels, I would say that as long as we are above now this monthly level, I think that we're coming up to at least 14.5. And then I think that as long as we're maintaining this as support, right? If we're maintaining this as support, I don't know if I'd necessarily be looking in the near future to that 12.9 level anymore. And my ideas yesterday or 2 days ago now, they did come to fruition, except we didn't get as deep of a pullback. All right, so this first idea was the under over. We were right around here. Overnight, you got the under over right here. And where did we hit? We hit exactly where we mentioned, which was right at the underside of this structure. And then ultimately had that sideways correction and still pressed up to 13.8. And what we were looking for was cleaning up of these highs. So when I was looking at the TPO chart, right, things that we've gone over before, what we were saying was, hey, in the days prior, so let me just change the ink color. What we were saying was, hey, in the days prior right here, that was a rollover, right? That was the market losing a little bit of steam. No major rejection, though. There was no tail like this. Even this was minimal. Not much that really stood out in terms of absorption up there either. So the market just swiftly moved up and then quickly came back down. But there was no tails in this structure right here. Even after poking that high, no tail. That's not a single print. That's a poor high. So ultimately, we haven't sort of walked into that level where we've come into any major inventory. And it's never a matter of price you have to focus on. You have to focus on where you are within price, yes, of course, in relation to important levels, but what level of inventory maybe we're coming into. And I can't imagine, and when I say inventory, I'm saying supply. I can't imagine we're coming into anything too serious, right? We're not showing any, we'll zoom out. We'll put, this is on the volatility, this is on volume-based chart right now. We'll put on a higher time frame chart. All we see in this entire structure has been absorption to the downside. So with this structure moving down, the CVD moving down, as this is moving up, maintaining the 7-day weekly VWAP, what we're seeing is that most of the risk has been put on below us. Okay, so it's not a case that buyers are offside right here. The absorption has been to the downside. So CVD has moved down as this has moved up. It's not a case of CVD looking like it's rolling over, like there's more of an interest overall to sell, because with these spikes up, you are getting big spikes in CVD. So what this is saying is on the entire move up, we're seeing sooner than what we saw back here. So back here in this flat area, it was relatively flat and you had a CVD divergence going back all the way back to previous areas. So let me just roll. Actually, this is not set to enough days. 1 sec. We'll go to maybe 100. That'll include that. It should include it. It's been a while now when you think about it, though. All of these entire structures leading up have looked something like this, flat, and CVD has done something like this. It's been more extreme while this has been maintained. All right, so what that is saying is that sellers are being absorbed completely. So what you're seeing, especially down here, Jesus, this is just brutal. Price has made a higher low up here. CVD has made a lower low, right? So that is aggressive selling. That all that's being done is just being absorbed. You don't need to look at a heat map. You need to see levels of liquidity, right? Where there are levels where price is speeding up, where it's slowing down. And all you're saying from left to right, from this left to right translation is, hey, there's actually more selling on this area of the structure, but for all of that increase in selling we've seen, price has actually moved higher. So, think about that. It doesn't take a, just think from first principles. It doesn't take a genius to figure out, hey, if you have more selling and prices moving higher, then we must have more passive buying, right? There must be a presence underneath us that is keeping us propped up. So that took longer to transpire in the past, and there's been more of downward price action in the past, and I think that's condition and sort of context dependent, because as we moved higher, you're starting to bring more and more confidence into the market. So you're seeing that bid pressure is starting to rise much sooner, which leaves us with structures, and this is why structures end up doing this. In the beginning, you get a deeper pullback, right? More uncertainty, then you break this high, and then it's, ooh, things are looking pretty good, speeds up a little bit. Each one of these structures gets subsequently smaller, and then finally you're left with a really big spike, and then you get a big correction, right? You get a big correction because everything starts speeding up and it starts moving towards a parabolic state. I don't think Bitcoin is in the state of approaching a parabola that is part of a blow off top. I think that it's in a hyper accelerating state right now, though, because it's very bullish, right? I think everyone knows where we sit in terms of the bull market. And just to give you an idea of what happened in the past, not all parabolas lead to the end of a market regime or a cycle, right? You could go all the way back to, this was of course parabolic, but that was weeks and weeks and days of parabolic price action, But leading up to that, if you take off the log chart, there were plenty of periods where you had parabolic massive moves. Now, you didn't lose the trend, right? But you did have major corrections. So we're all confident, right? We're all very confident that Bitcoin is embarking on the next major cycle, right? Next major bullish cycle. It's approaching the all-time high. But make no mistake, expect something like this eventually. Expect something that's scary, that's ugly, that makes you really question your resolve and your intention in this market. And then expect that, that this will be something that you wished you weren't around for if you just had no internet connection, because you'll see that it'll recover a week later. So BTC looks really solid. ETH, I got into ETH. Why did I get into ETH? Because Vitalik tweeted. Vitalik tweeted, and ETH started showing an immediate response. Not only did ETH show a response in USD terms, not something really caring about. Oh, ETH moved up to 406 in the time being. That's awesome. I'm sitting pretty. Not only did ETH show strength in USD terms, it's all about relative strength at this point. Okay, so if Bitcoin is moving up, we want to see that whatever we're in is not underperforming BTC. So looking at the ETH BTC chart has been very useful, because you've seen that it has been trending negatively against BTC. Now, there has been really important levels on this chart you should always keep in mind, right? Weekly level right here. So if we zoom out, this level hasn't changed on my chart going back all the way to this point at the beginning of 2020. So we came down to support. Okay, you have us coming down to support. Now look at that. That's the first 4-hour touch into this level, really, right? So you're looking at almost an immediate response once we pass through the level. So this is your weekly level. Pass through the level, and then what happens as we pass through the level? Vitalik tweets. It's like perfect timing. It's like higher time frame support, fundamental catalyst with regards to ETH 2.0. What does that offer? Short-term momentum trade. Does it necessarily translate to ETH suddenly, going on a tear? No, but it's worth the short-term momentum. What happens during a period like this? One side of the earth is awake, okay? One side of the globe is awake, and then you at least expect a little bit of a trickle-down effect for the rest of the day, where the rest of the market is beginning to disseminate this information, and you get a pretty decent move out of this, right? It doesn't just occur like that, and if anything, we would see that this was showing some types of signs of weakness. Another thing to point out, it's back above our level that we've been using as a line in the sand now for all this time. So this weekly level we're going back to July. Okay, so that 390 level, we're back above there. So we're basically back in business. So, I got into a contract trade. I got into a spot position. I got back into my big spot position that I got in and out of, I think, twice or 3 times in the last 2 weeks, which is a lot for me to start messing around with a spot position. But I don't want to overweight my portfolio under the impression that what has occurred in the past is going to continue in the future now without any kind of reasonable evidence. So as the market begins to mature, fundamentals become a lot more important, especially when you consider institutional adoption and major asset managers starting to come in. And, there's this first mover effect with Paul Tudor Jones, and then we see Square, and then we see, you've always seen Jack talk about Bitcoin, though. You see a lot bigger names come into the space. It's going to become a picker's market, I think, more and more with regards to the higher beta stuff. So ETH looking very good. Another thing that I wanted to talk about, and then we'll go through some of these questions. ETH looking good. Wi-Fi was getting punished. I think that Wi-Fi still comes down here. It's going through its bearish cycle. A lot of the DeFi stuff is going to take a really long time to recover. Look at MTA. I like to poke fun at myself because we're at the whim of randomness and other participants, right? Back here, how bullish was Ryan on MTA? I was so bullish, right? I was like, MTA is going to be my long-term hold, And, once MTA lost those weekly levels, it was a wrap, right? I was out. Forget, you idiot. You married into that. That was like, your high school girlfriend that you thought you were going to marry forever. And it's just been a really bad story since. And I'm looking at myself in the image next to me, and I have this Keanu Reeves tab open because my wife, 2 nights ago, she goes, you know what? You do look like you could do the Keanu thing with your hair. And I'm like, yes, John Wick. And she goes, here. And she takes her phone. She goes, this one. And it's this one. It's the Matrix. Handsome guy, right? I love Keanu Reeves. But she shows me this. And the whole time in my head, I'm thinking, John Wick. But my hair is probably the longest it's ever been right now. But yeah, MTA, all of these alts are just getting slaughtered. And I think it'll remain that way for a long time until Bitcoin breaks the all-time high and brings a bunch of new participants into the market. Last thing I want to go over before I take some questions and really give a lot of this to you guys to ask them is the concept of breaking an all-time high, right? When we are within structure, so, you get a bunch of different approaches to the market. And if we look at this on the weekly right now, some people are treating, hey, this is my range. Hey, this is my range because it's the value area, right? Some people go on weekly structure, monthly structure, daily structure, but you could rest assured that going based on some type of structure is very useful because other people act on that structure. I made a joke this morning about Scott Melker. He had a chart up of, it was Scott and it was two other guys. They had a chart of Bitcoin dominance, and they're pointing out the gap. And I was thinking, well, gap is not really a gap like in another. It's not a tradable asset. You could trade on Bitfinex, but it's $65,000 trading volume a day. No one's trading that. Okay, so pointing out a gap as something that you could trade technically on an asset that's not. It's not a chart you're really trading, right? It's Bitcoin dominance. It's showing us the ratio of Bitcoin's presence in the entire market. I think it's funny sometimes when people apply technical analysis to that or to something like the VIX. Of course, if you're looking at Bitcoin dominance, it's giving you a very clear idea of what's occurring, but you can't really treat it like support and resistance zones the way that, when we approach that level, suddenly people are going to start pulling off of Bitcoin. It's not necessarily the case. I think you could look at this as what has been the trend over time. Are we maybe approaching a level historically that has been respected where we have seen Bitcoin taper off? Yes, but trust me, the moment you start overthinking something like this, you're going to start trading it when there's really not necessarily that causal relationship to begin with. Because the reason why technical analysis works in assets where people are trading them on technicals is because there's a self-fulfilling prophecy to it. There's a self-fulfilling nature to me seeing a weekly level and being like, everyone knows that weekly level's there. A lot of people are going to trade it. It's probably going to offer a response. Whereas this, it's a little bit, more descriptive than prescriptive. Okay, so, all right, Bitcoin dominance is rising. Okay, we know that everything is getting hurt against BTC. You could see that either way. There are some times when people put up indicators and I'll laugh and joke around and be playful with them and be like, they'll point out an RSI. Trader XO did it yesterday and, he's a great trader, but I like to break people's balls. And he puts up an RSI of Bitcoin, and it was Bitcoin on the daily. And let me just pull this out. All right, so I'll show you what the idea behind the sort of not trolling, but just having fun. So Bitcoin is moving up, and he has the RSI moving down, which looks like an RSI divergence. So I said, hey, is that a 14-period setting? It's funny because these are 14 candles. So what that means is it's a 14-period look back. The candle that it's going to include in the first part of that is the big candle, which means that you don't need the RSI to see that there's a divergence. If you know that there are 14 candles right here, and each one of them has moved up less than at least the first candle in that 14-period look back, you don't need to look at the RSI. There's going to be a divergence because it's looking back and it's beginning to rate, based on the RSI calculation, the amount of momentum that has followed since that beginning period, right? And it's going to be constantly, it's going to be a 14-period look back unless you have it set to a 12. So the idea is, you could look at this chart or you could look at, Bitcoin and its relationship to alts. And you could see, all right, alts are suffering against BTC pairs. Bitcoin dominance is probably going up. Looking at this chart makes it very obvious. But looking at something on this chart like a gap, it's not as actionable as a gap that's a runaway gap in an asset that you're actually trading. Okay, it's not going to necessarily act as an imbalance. For example, when we look at a gap in BTC, with even a gap in the CME, we know that if we're closer to that, maybe there's a probability that people will be less intent on stepping in the way until it's filled. But the further away we go, we don't think the gap is necessarily actionable. A breakaway gap, when we look at something like this, which is just a gap in price action, we don't necessarily say that we have to revisit that, but we know that if we come back down there, it was an imbalanced area, and we'll typically see that it'll offer a response. That's in an asset that you could trade, though. Bitcoin dominance, you can't trade it. You can, but it's 65,000 contracts. It's It's nothing, right? There's nothing going on there. There's no one really trading it. Not enough to give it a meaningful response. Not enough for us to say when price approaches it that's going to be why Bitcoin dominance stops, right? That suddenly Bitcoin's going to sell off because we're approaching a gap in Bitcoin dominance. Same thing with the VIX. People chart the VIX with indicators. The VIX is a fear gauge, right? It is essentially your expectations of the next 30-day volatility. This is calculated by index options on the S&P. Can you say that there is some autocorrelation in, volatility? Meaning autocorrelation, meaning if for example, does this level affect the future level, right? Is there a relationship between each data point that affects the future data points? And this is autocorrelation, serial correlation. That's how time series momentum traders think of the market, right? Being autocorrelated. The VIX is a volatility index, right? It's going to move on headlines. It's going to move on expectations. It's not going to be something you can apply a moving average to. But yet you see people apply things like a moving average and a Ichimoku cloud and all these things to the VIX when it's just at that point you're seeing things, right? At that point you got to really, read a Nassim Taleb book to really understand my point with that. But in terms of, I was mentioning the idea of breaking what we think is important levels. Once you break this high, you are in price discovery. So you're in price discovery, and then you don't have, even where we sit right now, you don't have a lot of levels above us to know, hey, where do I have to know to take profit? Maybe where do I have to know in advance to consider taking profit, or at least de-risking, or maybe managing a trade? I don't know what's ahead of me. I suddenly don't have foresight. I suddenly don't have a telescope, right, to look ahead of me. Everything is kind of uncharted at that point. So how do you then monitor a trend? Well, you monitor a trend based on volatility. You don't want to be stopped out of a trend based on the trend's expected volatility. If the trend is expected to move an average of 2-3% a week, 2-3% a day, whatever, if it moves 1%, do you want to be stopped out of a trend, a position trade, a swing trade if something moves less than what the market is normally doing? No, you want to know when the market is doing something that it hasn't been doing that is abnormal for the trend. So what you should be doing is, let's say that we break, and this is not financial advice, excuse me, you should be doing whatever you want. This is what I'll be doing with my position trades, with my higher time frame swing trades. Once we break the all-time high, I will be implementing more of a moving average volatility stop based approach for higher time frame swing positions. So what each of these is going to do is, one, I'm going to know objectively the trend is still up, right? The trend is still maintained with something like the 20-period moving average on the weekly. So you could see in Bitcoin's history, as long as we maintain the 20-period moving average on the weekly, we could come down to it, right? But until we definitively close beneath it, I don't want to be stopped out of my portfolio positions. I don't want to be messing around with any of that stuff. I just want to know that the trend is still intact. I don't want to get washed out because of any kind of noise. So using a higher time frame moving average, such as a 20-period moving average, all right, higher time frame meaning on the weekly, mid-period on a period setting, because it's a 20, it's not exactly a longer term moving average or a longer period. Using something like that, or using a volatility stop, which is a really nice packaged version of an ATR stop. So this volatility stop is set to the 20-period ATR, and it's a multiple of 2. So what this is doing is constantly taking in what is expected as the range of price movement. So again, example, expected price movement for the last 2 weeks, let's say it's been $100. Do you want to place a stop for anything that's a swing position that is $50? No, because you can expect a $100 movement, right? The market is telling you these are the conditions that are normal. These are what falls between the average. So you want to be stopped out when something is abnormal. So an ATR of twice that, right? Market's been expected to move 2% a day. Okay, now we just had a 6% move to the downside. That's 3 times that. That's a 3 times multiple. A multiple of 3, excuse me. So in that case, maybe it's, okay, I got to pay attention now because suddenly this is not noise. Now this is greater volatility in the wrong direction, right, for the trend, in which case is upward. So I would say to use something that is more trend-based, takes into consideration current volatility. So something like an ATR stop, which is a volatility stop. This is free on TradingView. Something like a moving average as well. Because what you'll do is you'll eliminate, you'll take away the emotion to some degree. Okay, the trend is still intact. We had to pull back down to, 11.5. Well, the moving average, the trend has been known in the past to really start getting wild once we start picking up steam. And again, you don't want to be stopped out of your spot positions left and right. you want to trade your trading account with maybe a little bit more consideration to shorter term levels and more local levels. But once you pass this level, there's nothing, right? There's just the idea of velocity and volatility. All right. So how much are we going up over time? What is the expected volatility for that time period? So these things, we teach them on BlockRoots. If you want to go to BlockRoots, absolutely go to blockroots.com, join a community. I don't do too much advertising of that, but yeah. So volatility stop indicator, go to trading view, go to indicators, and go to volatility stop. So you can just type in volatility stop. All right, and it'll be right there. It's free. And all it is a multiple of the ATR. And you could change that around depending on whether you want 1.5, 2. I think a multiple of 2 is good. All right, so let's see. We have any questions? Where do you think the next Wall Street cheat sheet we are with BTC? Well, Wall Street cheat sheet is it was something that started getting passed around at the right time in crypto, right? It started getting passed around over here, and I hope I kind of assuaged or reduced some of the fear of parabolic moves, because they don't necessarily need to mean that it's the end. The end of this move with Bitcoin is probably the end of the growth driver, which is probably, rates, an exodus from traditional assets. I think that, this push is not going to be retail for the first time learning about Bitcoin really in mass the way it was back here. This growth driver is much more fundamental. When that dries up, I think that you could start to say, maybe Bitcoin's going to start tapering off. What is an example of that drying up? Maybe rates going up, right? Maybe rates start increasing. Then you probably see that Bitcoin begins to taper off, and maybe at that point the fuel has been to some degree burnt. So I don't really, the Wall Street cheat sheet, it's like a caricature. Okay, it's not something that is meant to be so you shouldn't be sitting at your computer with the Wall Street cheat sheet, trying to hold it up to the chart and figure out where we sit within it. I think that, you'll have multiple periods of that in the course of an asset. Let's go to large caps. Let's go to Amazon. Wall Street cheat sheet. Let's go all the way back to 2000 and let's go back to 2000, right? So it's 2000, 2001. Does this look like the Wall Street cheat sheet? Yeah, to some degree, right? This is a weekly chart. Went on to the daily. It might be a little bit more higher def looking, but higher def looking, as if, I don't know if that's the right way to say that. Where's Cred right now? Cred didn't stop in today. So, this is an example of the Wall Street cheat sheet, right? And then it goes on to continue to cycle upward, and it'll continue to do this over time. The idea is, do you determine, or do you think that the Wall Street cheat sheet is something that is part of a bubble, or is something that's just part of an asset that goes through cycles? So in the beginning, people were looking at the Wall Street cheat sheet and saying, well, Bitcoin is a bubble. So this is where we are in the cheat sheet, and after that is dead. All right. A bubble, by definition, is not something that inflates again. So Bitcoin is already, I think you have to be, I don't think there's anyone really doubting Bitcoin anymore the way that they were, right? This is, how many times can you doubt the asset that outperforms every other traditional asset for the last 10 years? I know it's got a lot more volatility, right? Sharpe ratio, in terms of risk-adjusted returns, I think it's there though, right? It's definitely superior, but it's got a lot more volatility. So more downside, more risky, but it is what it is, right? You're willing to bear that risk for a tremendous amount of upside if you believe in the space. I am a firm Bitcoin believer. I'm not a firm alt believer across the board. I am a firm believer that a lot of assets go on to make people fortunes in this space. I'm just no longer a believer that you could just go, here's a few bucks and toss it at the wall and expect that you'll be able to, sail on into the sunset with no skill. Okay. No, markets are fundamentally broken right now. Jimmy Thomas. Markets right now are not necessarily a reflection of the economy. Markets are, if you look at the S&P, what is the S&P? We'll do some teaching in this. S&P by weighting. Let's get out of Keanu Reeves. S&P weighting. Okay. And here we have top S&P stocks by weighted index. So you have Apple, you have Microsoft, you have Amazon, you have Facebook. Let's see, this is up to date. It is. So you have Apple, Amazon, Microsoft, Facebook, Alphabet. We'll just stop there, right? So Google, Apple, Amazon, Facebook. So if you get Trump coming in office, that might not bode too well for Facebook. But these are 5 assets, right? The same way that the entire market cap in crypto is skewed by Bitcoin. Now, do these assets represent the economy? No, right? They don't represent mom and pop. But there is something to understand with regard to anything that happens in a market. The market is going to do its job to, I think, in the long run, elevate those who are, survivors, to eliminate those who are stragglers, and wealth is not created or destroyed. It is simply just reallocated, right? It's a redistribution of wealth. So things are very disconnected right now. I think that you ultimately do see that the S&P continues to move up over the next 6 months. And then I think that you're going to end up having to catch up with a little bit of the fundamentals. And we might have a period of, stagnant growth. Do I think it's going to be like Japan? No, I don't. But at the same time, number cannot go up too far before reality starts catching up to it. In the time being in that interim period, can we have a certain amount of revitalization that sparks some life in things that maybe right now are on the edge of the cliff, and then we have reduced some of the downside because of that? Yeah, we could, but we could do a lot of things in the near future. There's definitely something to be said for markets being disconnected right now from the economy. It's the only place to be. So consider this: yields right now. There is really no yield but the yield you're going to find in some of the riskier assets right now. So the S&P absorbs more optionality, absorbs more. It is the carry trade for the world. So if you're not in the S&P right now, you're not in really anything that is protecting you against inflation. Even TIPS are not necessarily protecting you against inflation. And TIPS are treasury inflation protected securities. So you have to be in equities. So you kind of are forced into this, which creates this feedback loop. I think that Bitcoin is in a better position because it is so much smaller. So even if if the gap bridges between those, Bitcoin is probably going to benefit more. So yeah, you like metals, physical? Yeah, I think there's a place for gold. In terms of much of an allocation, I think that gold is going to lose a share to BTC. So I'm not tremendously interested in metals because I think that we are at a point where Bitcoin is going to start gaining as boomers more or less pass on their portfolios to their millennial children. BlockRoots members automatically sign up for your newsletter. Do you have no? Yeah, they automatically are, right? They automatically are. Once BTC price is on the other side of 20K and price is spot driven, who would short it? Not I, man. So that's another thing. When would you short? I probably wouldn't short. It'd be really tough. You'd have to have first a major level lost, right? For me, let's just go over maybe when I would short. Yeah, of course you can have intraday shorts. That's fine, but how do you rank things? We went over this in BlockRoots yesterday in one of our Zoom sessions with a new trader who's so detailed. Has his whole plan written out, how he weights different market conditions, what his setups are. Fantastic approach. Attention to details is phenomenal. What I like to do is rate, right, certain setups in certain conditions. So a short setup in a ranging environment that might look structurally the same as a short setup in a trending environment, obviously those should be weighted differently. In a very strong trend upward, you can imagine that, just to put this simply, your shorts are becoming a little bit less prioritized. So maybe the first time you have a decent short is maybe you put in a weekly or a monthly high, right, where the market is having trouble with an area on the weekly, and you see that you've come into a major area of resistance. Okay, so maybe at that point you do have a level that might act as a reasonable area to short. You got a weekly level this is at 52K. Don't take that too seriously. You get a weekly level right there. Market moves above the weekly, loses it again on the weekly. Sure, this opens up short opportunities the same way that structure works. Same way that structure works in other market regimes. If you start to lose the 20-period moving average, let's say the price comes up, we hit up to 32, right? Hit 32, and then, then let's say we put in a top at 40 something, lose the 20-period, and then we're having trouble again with it. Paying attention to other market factors, and maybe that growth driver is a little dry at that point. Who knows? This is, when you're looking at this chart, when I'm drawing this, look where I am. I'm going into 2022. I'm going into 2023. So keep in mind, we're looking at a really higher time frame chart. So yes, there will be short opportunities. I'm not going to be prioritizing them. I don't know who's going to want to. There's going to be I can't imagine any sellers up here. So not initially. I think you're going to see a pretty insane movement after the all-time high is broken. You see insane movements in assets that are traditional assets. Bitcoin is way more reflexive than all of those. So I think that you're going to see, what you would expect, right? What you would expect from the crazy person in the group. They're going to do the craziest thing. It's your dumb friend who jumps off the roof trying to get into the pool. Okay. All right, Ash. Take care, Ash. Thanks for joining. What price should we be expecting Bitcoin to reverse to? I don't have any expectations of where it's going to reverse to. I just have the levels that I'm considering as first levels that could be areas of support, or in this case of support. And you can see now, is there a confluence between this daily level and the moving average? Yeah, there's a confluence right now between where we might catch up to around 13K. So I'd be buying dips anywhere down into this level. So do I think that, this is where you might build your base above this previous monthly all-time high? Nah, maybe not. Maybe we got the spike up and now we get more of a pullback. And again, my levels right now, this prior daily level, that's not as useful anymore. That was when I was looking at this point, extending this forward, if we're going to lose that level, but we treat it as support, and we're looking at other factors as well. But, looking at this kind of naked, where are your support and resistance levels if we're just going based on structure? And if we're also considering that on the way down, expect a shallower pullback and less reluctance to sell these levels than to buy them. So you have this level right here around 13.7, just loose. Remember, it's an area, so loose right around 13.6, 13.7. Then where do we have below that? I could say that high, maybe around 13.3, 13.2, going on to the daily, going back down to these swing highs. Right, you get the idea. There's a good amount of levels below us that should act as support should we come back further down. Which again, completely normal to do that. Does this look very bullish right now? Absolutely. Have we had spikes up before where, again, you get something like this spike down and then we just went to a longer term consolidation? Of course, it looks like these periods are speeding up in terms of the length of our consolidation and ranging periods. It looks like they're speeding up and they're being bid up sooner. So would we anticipate that this would not? We'll see. We will see. Could ETH be something that leads right now? Possibly. There's a whole lot of things to consider right now. Considering the market as bearish is not one of them. ETH 2.0 could be a trigger for trying to reverse for alts. Yeah, I don't know. I think a lot of alts have a lot of pain to go through, or a lot of boring price action to go through. You're not going to do something like this with Wi-Fi. This is just telling you one thing. It's just supply. It's just supply. Could you do something like this, come down, pop back up here? Yes, but then these are going to take, trust me when I say I'm really confident in these taking a long time to recover. So all of these telling you basically the same thing. Dot, again, holding up though. Dot holding up to some degree. Starting to speed up a little bit more down here, but coming into an area where it might act as support right down there, right around 26,294. But I think that, right now, Bitcoin's showing strength. Bitcoin is not the place that you want to be underweight. ETH just starting to show strength again, but it could just be ETH strength that's just, specifically for ETH, not something that's going to carry the rest of the market. Link, again, having lost some pretty significant levels. So Link lost this diagonal trendline support that you had, lost the daily level right here that we were focused on. So I don't know how, Link might be going through a longer term correction down here. I'm out of Link again. Link BTC showing more of a clear sign of weakness. So I wouldn't extrapolate strength in ETH right now yet across the board to alts. I think that's dangerous at this point. Okay. More questions. What else you got, guys? What else? Any other alts? Any DeFi pairs you guys want to see? How long are we into this? We got 49 minutes. Not bad. BTC back in range. Not really. It's not back in the range yet. I mean, if you're going based on this high, but nothing that's that impressive yet. We'll see, right? Could just take longer, mosey on more sideways. It's exciting when it does this, but You know, we're seeing everything catch a bid right now. If you continue to see the ES move up, I don't think you would see that Bitcoin is going to start dumping. So, and you also have right now the dollar that, while it was pretty crazy yesterday, has lost a little bit of strength. You know, and dollar weakness is something that you would expect with a Democrat in office. Monera, RVN. Raven, you know, it's funny when I get requests. I ask for the requests, but I just, you know, I know that there are people that hold on to these things that have just been moving down forever. This is something that I wouldn't touch with a 10-foot pole until it is back above. You know, we keep it honest on this stream. We don't. That's the only thing that we focus on is keeping it honest, right? You got, looking at this on the weekly and daily, you have a lot of work to do if you're in RVN. You have a lot of work to do. You know, you have to get all the way back up here before I would even consider this as being worth getting involved in. Not to mention it's become pretty much irrelevant in the last few months. Uniswap. So look at Uniswap Tether, Uniswap BTC. So let's see. Uniswap, where's BTC pair? Here we go. Right now, Bitcoin is showing strength. If you're going to be in an alt, it has to be showing relative strength against BTC. And these are all just showing relative weakness. So looking at Uni, you know, this is in a gap, right? So this is probably going to come much further down. And if it's not, it has to retake previous weekly levels or daily levels, which again, most recent daily level is this little consolidation that we had for 3 days. So if you don't get something that occurs like this, you have no sign yet that there's really any reason to get involved in this where it sits in this gap. Uniswap Perp is a good thing to look at, right? As an index, maybe showing a sign of potentially turning, but you would again need to do so. You have this triple drive into the low. You would need to have this sort of under-over pattern back above this. Looking at around 14,550 level. So you have the structure that's right in your face to pay attention to, but if that level doesn't come, so DeFi Perp as well, if these levels don't come, then there's no reason to be in them. So this is your previous consolidation. Yes, we are at an area of previous. You have this little cluster down here. I would need to see with something like the UniPerp that, for example, we're doing something like this where we're back above this sort of 1580 level. And then you're targeting initially the lows of this prior downward structure, which, you know, began at 1735. So there's a lot of work to do for DeFi, guys. A lot of work. And that's because you got people that bought really late, and they're the people that are selling on your bounces. And that's why it's almost like these things have to die completely before they're ever able to get picked up again, because you just have everyone willing to sell on the first bounce. Oh, okay, wait a second, screen. So let's go back over that. So RVN, just show what I was talking about. I'm going to go through this really quickly. Again, you guys heard what I was saying. So RVN, completely just a wrap unless you get back above this daily level. There's nothing about RVN that looks remotely attractive. Going back to Uni. So we go to Uni. More recently, this daily 3-day cluster, you need to be above that. But ultimately, you know, that is around 17,281. Ultimately, you're in this gap, right? You're in this gap, this little pocket right here. No sign in sight yet of strength, and that's against BTC pair. Then we look at the Uniswap Perp, which again I was talking about the 3 drive into the low. 3 drive, you need to overtake this more recent low to make a case for strength. That is again right around, we're looking at right around 14, say 14.5. So you want to do something like an under over. Okay, maybe in that case you have a case for a short-term reversal. It's not there yet though. DeFi Perp, same thing. More recent consolidation on the daily structure. 3 drives into the low that was lost. So I would need to see that you're back above this daily level, and then you're at least moving from, you know, maybe you're getting a move from around 15.5 to 17.25, but you still have work to do. This is, if you go to the weekly structure, the daily structure, we were on it, and you extend this moving forward, this is your most bullish level to retake, right? If you're back above this level, that's fine, right? Maybe you're at least at this point hunting the highs at 21. But nothing is looking good for DeFi right now. Nothing. Trust me when I say nothing. I'm extrapolating across the board to everything. And I know you might be thinking, what about my pair? But unless Wi-Fi is moving up, unless these DeFi indexes are moving up, you could bet that everything is correlated right now to 1. Okay. So DXDT on-chain analysis is not my specialty. So while you would love to hear about it, so would I, because it's not my forte. It's not something that we could talk about supply coming onto exchanges and how supply not supply maybe on exchanges being lower is good because you're ultimately people are maybe allocating more to their cold storage and we're seeing lesser. You could go into all that stuff that's on Glassnode and on crypto, one of the platforms more recently that I've been sharing, Quant, or can't remember what the name is, but that's not my forte. So I don't get too much into on-chain analytics. I'm not going to act like I do. So on the other side, you have arbors that are going to come in to get paid that funding. So that's why, that's why you need, for example, a funding rate, because you can't have a derivative without the funding rate, because otherwise when the market is moving up, who doesn't want a long? So you need to incentivize the other side of the market to get paid an interest rate component so that you have people that come in and arb that and that get to take advantage of that, collecting that those basis points. So you see the charts now, guys. Dot. One sec. So dot is actually, dot against BTC is what we need to focus on right now for relative strength. Dot is at least cleaner on the way down, right? So I think with dot, you've seen it hasn't dropped as much as other pairs. You have more of these interim levels though that it's respected on the way down against BTC. You're almost at higher time frame where would be the next higher time frame support level. So if you get something where dot is back above 30,000 sats, maybe you have a short-term reversal, but I would really want ultimately dot to overtake this level right here. You have low, high, low, higher low, low, and if you did something like this, then you could see some type of relief in dot. But at that point, you are seeing relief, right? At that point, it means that conditions have somewhat changed. Dot BTC, again, my level has been 450 against dot USD. So we're below it now. Until we do something like this, I'm not really interested in dot. And that probably leaves you with a range that is forming either way. So clear break above that, then of course it's obvious. Then of course we're approaching a level that should have rejected price. And if we're coming back to it, then clearly it didn't do its job. Synlev. See, these names are funny. I don't even know half of these. Synlev. You mean synthetics? SYN? Yeah, I don't know what Synlev is. Synthetics against Bitcoin, SNX. Yeah, DXT, DXDT. It's funny to refer to you as that. I pay attention to that stuff, but it's definitely with the guided learning of someone else who knows a lot more about it than I do. I see someone who is a on-chain analytics person posting about something, and I'm happy to realize that, oh, that makes sense. Yes, of course. I could look at this, and I can go to these platforms and look at the on-chain stuff, pay attention to minor flows, and say, okay, this makes sense. But there are some people that, that is their area of competence, that is their sole technical focus. I don't want to act like, I completely have it figured out with that, because I just focus where my strong suit is. SNX. Cutting through what should be higher time frame support. This should have offered a rebound up there, at least within here. You should see it. I'm trying to figure out what these blue lines are from. Nah, that was just the underside of the structure at the time. I guess I extended that forward. So you know what? On the way down, not looking too hot, right? SNX. Mutual insurance. What is Bybit Mutual Insurance? Is that Bybit's options? Bybit has sort of this binary option, I think. It's similar to a binary option. It's not a binary option, though. Where you could buy insurance based on market moving against your portfolio. I think it's just a short-term option play without much complexity to it. I've never used it, though, so I can't, but in simple terms, it's a short-term option. So you pay a premium, right? It's insurance. So you pay a premium, and you're essentially hedging yourself with it, Would you sell DeFi coins or BTC now or wait month to years for the next? I would not wait month to years. Look what happened to people who waited month to years for ICOs. They never pumped again. The idea that because something pumped once, it's going to continue to pump is it's a very poor mistake to make. Being offsides. Being offsides means that okay, so when you buy the high, you're offsides when market moves against you. So what we look for, a lot of what I look for on the higher time frame and on the lower time frame involves finding which side of the market is offsides. So we could get into an entire really long video going over the higher time frame ways I do this and the lower time frame ways. What we're talking about is, let's just draw you a simple example. So we have an area of, let's change the ink. You know, guys, I'm kind of tired of the pink. Nothing against it, right? We have higher time frame support. All right. This is a, let's use the line tools. Higher time frame support. All right. Maybe this has been touched twice as a weekly chart. All right. We have what is forming as a range. Okay. We are approaching again the low of this range now for the third time. So what do you have around this range? Okay. You have at this low, you have anyone who got long here or here, they likely have stops below, right? If you got long at position 2, you probably place your stop around position 1, right? You're looking at it, a structural static stop. Maybe you give it some breathing room. Maybe you thought about this and you apply ATR to this just to make sure you're not wicked out by noise. But you have a stop down here. Your stops are down here if you got in over here. If we're anticipating a move again, you want to be stopped out if we're returning back to your entry. Now, hopefully you take profit at the high, right? Hopefully you took profit, you know, but this is not a, we're not talking about the perfect situation with the perfect traders, right? So you have this low that have stops for the longs. You also have on the move back down, okay, you have shorts that are looking to get involved in breakout longs, breakout shorts. So they're looking to sell at a break of this level. You have market orders that are down here that are automatically looking to sell. So if you're not interested in shorting this until a break, right, you might place a market to sell down here. So you have a lot of liquidity down here, okay? So let's say that you're the trader that is waiting for this level to break. Okay, this is over the course of a few weeks, and your system is that, all right, when that level breaks, I'm balls to the wall short. The level breaks, okay, you get short, and now we are back above your position. Market recovers, okay? Market recovers now. Everyone knows that it's recovered. Now everyone's starting to look at this as a swing failure. You probably filled a lot of bigger positions down here that knew about this liquidity to begin with and were taking advantage of that flow. Now you got in here, and the market is up here. You are offsides, okay? You got in position, but the market moved against you. So now when you're offsides, okay, let's draw the support again. And before the market retests this support, let's say that you got in here in a short on a breakdown of this level right here, and now the market is right here, okay? So you got, excuse me, let me draw this closer to the level. You got in short, right? I'm trying to get that eraser to be precise. So you got in short right here. So market broke through, you got in short. Now the market ripped back up. So we're right here right now. All right, you're still in position, you're offsides. That's going to dictate your response, right? We could agree it's probably going to dictate your response. What are you likely thinking of doing now? You're offsides, okay? If you're in a levered position, you might have been squeezed out already. You might be liquidated, you might be stopped out. You're helping your stop after you enter your breakout short is probably up here. So that's why you get squeezes upward a lot of times, because you get that cascade effect. Now, you're offsides, okay? You are hoping the market comes back down to this level. Why? Not so that you could probably add to your short, so that you could recover your position, so you can close your position out. So that's what ends up helping this act of support now, because you got short over here, market broke down, moved against you, you're offsides up here, market comes back down to your entry point, you're thinking, I need to get out of this. You buy back your short, and you end up creating this support and resistance flip. And you're part of the reason why that buying pressure begins to flip and that dynamic occurs. Offsides means, and the same thing can be at the high, offsides could mean that in the duration of this range, okay, something like this, okay, let's say that we've been ranging up here. Here's your resistance. Price breaks through. You get long on the breakout, price moves against you. Now you're offsides, right? So what things happen? Okay, you might be stopped out. You're selling your position. You help the downward selling pressure. You might have had a stop down here when price moves back down to that stop. You know, maybe you're liquidated, maybe you're stopped out. If maybe price doesn't hit your stop, but now you recover and price is coming back to your entry point, you're probably going to sell at that point. So you're going to create that support and resistance flip. Think of all the things that happened for all the people that got long up here previously. If the market begins to move very far away from their entry, so let's say that, for example, in this structure, the point of control is also up here. The VWAP is also mostly isolated to the top side of the structure. Now if price is down here, most of the volume came in up the high. You got in at the high, right? The VWAP is at the high. Most of the risk was put on up here. If the market moves lower than where most of the risk came in, well, probably a lot of positions are offsides now. So that's why you get these unwinds and these reversals, because when a trader is offsides, they are probably going to be closing their position out. So offsides just means that, right? You're on the wrong side of the trade. You got into a trade and it went against you. So there's plenty of different ways we could see higher time frame traders offsides. If we're using something like funding as a sentiment tool, we're looking at basis, and we're seeing this occur at important levels. You start making building a thesis around that. We look at footprint chart to very well see it clearly. Let's say that let's just use this as an example. Let's go to a more recent high. What chart we're on? Let's go to the 15-minute just so we can compress all these quickly. It's a weird graph. Yeah, it's probably the BlockRoots logo. We'll fix that. Don't worry about it. You don't need to see my mouth. So for example, at a break of this high. So this is, we broke above the monthly level. Let me get this to a different color again. Let's go red. Let's go white. Broke above that monthly level. Let's say this is monthly. It's actually further down. All of these buyers that weren't stopped out shorts, right? So all the new business on the right side of this candle, 3 million contracts, 2 million contracts, 1 million contracts. When they got long up here, once price moved against them, they're offsides, right? They're offsides. Now, if you see that, so this is one of the ways in which I take short-term trades. If I'm looking at on a 5-minute chart, let's say that price just broke up, consolidating on a low time frame chart, and at these highs, we have a ton of volume. So let's imagine that this is a 5-minute chart right here, and I see there's a ton of volume at that high, and then we start to lose those levels. So let's say we start to trade below where the volume came in. A lot of the times I will enter into a very quick position because I'm looking for this person, whoever it is, right? Entity, doesn't matter. Whoever got into that position, I'm looking for them to likely unwind their position because they're offsides and uncomfortable, right? So they puke their position and they help create that liquidation, that spill. Okay. All right. At what level do you think the big traders would try to engineer some long liquidity to be on BTC right now? I think that it's more than that right now. I don't think that I think you're seeing the market bid up sooner and sooner. I don't think we're necessarily going to get some big liquidity engineering event where the market spills yet massively to create long liquidity, right? Where you have, stops below these lows. People would argue that the stops are, that some big whale is down here looking to fill a cascade or fill on a cascade. So the problem with having staggered stops is there's staggered lows. Is you have stops here, you have stops here, you have stops here. None of them have been interrupted on their way up. So from here, 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 all of these have been above the last. So there's been no issue with leaving your stops down there up to this point. So the argument is, if you start to move back into this area, this stop cascade hits that one, and then that's why you get those cascades, right? Because you have all that selling pressure built into that structure that has yet to be interrupted. Okay. All right, guys, we're like, what are we? About an hour and 14 minutes into this. RIP, storage. These things are old, aren't they? You guys have some bags, don't you? Oh yeah. Oh yeah, that's ugly. Keep it honest, guys. That is an ugly duck. All right. I mean, so I don't have to worry about getting too specific. I'm trying to get the levels lined up nicely, but Nice is really, we don't have to be nice to this chart right now. It has to do more for us than we have to do for it. So this is your previous higher time frame range that we were in from, going to 2019 to 2020. This is on a weekly from June to, yeah, it's about a year long, right? Now this whole area, since it's a range, it should act as support. Generally speaking, this is not something I think is going to be, oh, we're back at higher time frame support. This is where you definitely buy. It's an ugly chart. Just look at the story that the chart tells you. You got the range, right? You had the range for over a year. Price broke out of the range. Very bullish, right? Big move. Talking weeks on end, 4 weeks in a row of upward price action. Now, price has just retraced that entire move. So it's not like these things have infinite ammo, right? To continue to move upward, and it's just, oh, we're just back at the low and just goes all the way up again. At some point, the pain of every single drop just pushes people out of this asset. And you need to see it just bottom for a really long time. Not to say that this goes on to be anything, though, right? Looks like pump and dumps. It is. Yeah, altcoin, plenty of people are in that position, right? Engineering long liquidity. So that sort of gets into the idea of when we talked about a range and swing failures, right? You get a major swing point. There's a lot of liquidity down here. We have long stops. We have breakout, short. Market stops. You have Can you hear me now? All right. No, just relax, guys. So that should work. Is it echoing though? Because it might be echoing. So if it's echoing, someone let me know it's echoing, and then I'm going to try to get rid of this audio input capture and see if it's just working again. Not sure why that wasn't working. But you guys are lagging, so I can see you're still typing that. Can't hear me. All right, that's fucking weird. Why is that? Oh, you do hear me. Yes. Okay. Is it echoing though? Okay. Yeah, I don't know how. I didn't even touch anything, guys. I don't know what's going on. So, whatever. Okay. So, yeah, I mean, we kind of got to the end of it. It's not like there's a whole lot to talk about left. ETH looking good. BTC looking good. Now, mind you, they are, at this point, they've put in their moves. So, we got to see that we have a strong base of support after this move. I don't know, I don't know if we get more of a correction with BTC. I'm not overthinking these, though. The most important thing to do is to understand that, for me, I'm in spot right now. I'm not in any kind of leverage longs with Bitcoin, so I'm not really overthinking anything. Let's say that BTC loses this 4-hour level, so more recent 4-hour high. All right, let's say we lose that. That's not what I want to draw. Let's say we lose that, right? You could take short-term trading opportunities back down to prior levels. Okay, imagine we lose the monthly, right? We lose the monthly again. So lose this monthly. Then, yeah, maybe we have a deeper correction that's just going to form within this range, and it's still going to be a respectable range, though. It still brings us to, local areas within structure that we should expect to act as support, which now we'll just put this prior daily swing low. Areas that we've respected, you don't have to worry about my levels too much. Just look where the pivot points are. So this still leaves us with plenty of levels to take trades off of. I think that if you keep messing with the high, all right, we'll look at something like VWAP right now. What do we have so far? We have a decent high at this point. So, okay, maybe the market is putting in a little bit of a interim high, temporary. We can hear how much change you have in your pocket. I don't have any change in my pocket, man. No change. I actually never have change in my pocket. We put in a decent high up here. So maybe the market has temporarily found a little bit of an exhaustion point. Not any absorption yet, though, right? So no absorption. One thing that you could say is, hey, for example, why does that pop up? I don't even know what the fuck that tool is. Let's say that, for example, we're looking at over the last few hours, we've been above the daily VWAP. All right, so you have the monthly level right there at 13,887, and you have the daily VWAP right here. So let's say we get a 30-minute close, hour close below daily VWAP. What does that say? All right, now we're back below where most of the risk was put on over here. So okay, so maybe we get a pullback back to previous days opened yesterday around 13.6. Okay, maybe you get more of a pullback at that point if we start losing the weekly VWAP. Then you have more of a case for a deeper pullback. So you start losing something like, which is at right around 13.5 something right now. Start to lose this weekly VWAP. What that means is that most of the risk that was put on is now we're against it. So buyers have been in control. If you're below the weekly VWAP, now you're back below the level in which most of the risk was put on by buyers and sellers. So you can imagine sellers are in a better position. So then, yeah, maybe if you're below the weekly VWAP, then maybe you get that pullback back down to 13 or 13.2. The more just the levels that stand out as pivot points, I think are good because you want to think too deep yet. Things are getting front ran. Yeah, I've been in spot long BTC. I added more of my dry powder today. Most of the dry powder I put on today was on ETH. But yeah, I added some to BTC. But I've been in drink the Perrier or drink the water. I've been in spot BTC pretty heavy since right around 94, 96. So sitting really good, man. Sitting really good. Sitting well, whatever it is. But yeah, I think that covers it, guys. We've been like an hour and a half into this. I think it was a good stream. Hopefully you guys have learned a lot. And, we're going to be doing these streams at least 3 days a week. So Crypto and Coffee, it's normally 9 o'clock in the morning, but I think that I like this time better. I honestly do. I think that I like the 12 p.m. New York City time. I'll tell you why. 9 o'clock in the morning. I've been up since at least 7. Um, some days my niece again gets dropped off, and we have to take her to school. My wife takes her to school, right? Her parents work in healthcare, so some days she gets dropped off, and I'm up in the morning. That's fine. But then 9 o'clock, market opens at 9:30. You know, market opens at 9:30, and I honestly sometimes I need to be in the market and be trading, and if I'm in a live stream, it kind of just it's like it takes away from business, right? So I think that the 12 p.m. to 1 p.m. slot is good because that's lunchtime, right? So that's a time when you'll see a little bit of a lull, and I think that's a good time to do it. So what we'll do is moving forward, we'll do the streams at 12 p.m. in the afternoon, and then from time to time, you guys, you're familiar with me by now. I I like to throw in a random stream. So maybe one morning, throw in a random stream, and I'll update you guys and I'll post it. And maybe sometimes I'll do it later at night because we do have friends in other parts of the globe that maybe don't get to watch this. So that's that, guys. It's been a pleasure. Still in the Phemex competition. Haven't been really doing too much in this lately. Been focusing more on my personal account, but after yesterday's trade, I'm up 17%. Yeah, I did start with too much Bitcoin, so I was supposed to start with 0.02 BTC, which would have made my levered positions to really grow the account a lot. Still under 2,000 contracts. I have to trade with a third of a Bitcoin, so I have to trade with at least, I'd say, 7 to 10 times leverage to try to really put in big numbers for the competition, and that means I'm trading with contract sizes around 50K. So anywhere from 30 to 50K, which means that I'm getting hurt on some of the market orders. And the competition is all about swinging for the fences with small amounts on high leverage. But in the last week, putting in a 17% account growth on the portfolio, right? That's on a third of a BTC. That's do the math, right? I think on the math, I think in terms of what I've grown in the last, so what is it, 0.09? So if you're just doing the math on that, we're looking at, the account over a week period up $1,400, right? So that's just to show you that you could do it with this is all basic single base hit kind of trading, not doing anything too extreme on this account. So I think that covers it though, guys. Thank you guys for stopping in, and I wish you guys a fantastic week. Today is only, what is today? Today's only Wednesday, so we have another stream on Friday. I look forward to it, and all of you have a fantastic morning, evening, night, whatever applies to you, right? I will talk to you soon.